Hello guys and welcome back to the channel. So Palantir is in trouble because it's dropping like a stone after earnings. So let's talk what happened, because I feel we need to keep it real, guys. And this is going to be a very good video, I believe, for long-term Palantir investors. And some people might get butthurt on this video, but whatever. So Palantir crashes after earnings. You can see we are $5 and 28% down, which is what I thought would happen if they report the way that they reported. But then somehow after earnings, the stock went up for no reason. That was really strange. So I'm kind of glad that this happened. It kind of vindicated what I was already thinking. So, but is the company in trouble? That is the big question that we need to answer as shareholders. And the funny thing is, do you know all those guys who, were not buying Palantir at 6 and then the stock went on a skyrocket ride and then they said, yeah, when the dip comes, we will buy. The problem is they didn't buy at 11 because they are waiting for a dip, and then they watched the stock go all the way up to $20. And now the dip came. So now, where are those people? Because everywhere I looked on Twitter today, everybody seemed to be very pissed about Palantir earnings. So what happened? Okay, basically Palantir reported in line with management guidance. So why is that a problem? That is a problem because after the last report, the expectations have built up like crazy, and we had a huge rally in the stock price. So people somehow built up their own expectations and they wanted more. But the truth is, this was the slowest growth quarter of Palantir ever since I follow this company, and I don't know if in its history, but since it's public, definitely this has been the slowest quarter. And when we were looking at the company a year ago, the growth was supposed to be 30%, and it came in at 20 something, 18 something, and we were like, okay, it's gonna go back up. I mean, that didn't happen. So yeah, that is not looking good. But we were saying, okay, we knew that management guided for 13%, but they're gonna change the guidance and then it's going to go back to 30%. Well, they raised the guidance to like something like 16%, which is really not what was needed, right? And then on top of it, we know that there's all this talk about Palantir getting all these new customers, and that should be money in the bank, right? If they're getting all these new customers, where's the money at? So this is what the new investors are asking. And on top of it, the net dollar retention was 110%, and this is double that. And I have a theory here, because their top 20 customers, which is 50% of their revenue, was actually growing 115%, or they had a net retention of 115%, which means that all the other guys had something around 105%, which is pretty bad. And I actually really wanted to have this explained, and I have two theories to explain that. When I was listening to Amazon's earnings call, Andy Jassy was saying that AWS, they're actually speaking with customers and seeing how they can cut down their costs. And they know that on short term, this hurts AWS, but on the long term, it wins them a lot of goodwill and customer loyalty. And I can actually see that the top 20 customers of Palantir are government organizations, and I don't think that they care that Palantir raised prices, or Palantir is so embedded and they can't get rid of them that it is what it is, right? But on the new customers, what if Palantir is going around and is trying to do the same thing as AWS and see how they can cut costs for the customers and how they can restructure to gain goodwill, not lose customers, and think about the long term. Obviously, we would need more. This is one of the things that I really want to dig into, and if anybody has any info on maybe the 10Q report or something, you can send it my way. I would really want to look at it. My other theory could be that there was some SPACs that went bankrupt. The SPACs were companies that Palantir invested in, and obviously when companies go bankrupt, then you lose them as customers, and then I don't know if this is a dollar-based net retention, so maybe you had to minus like the business that you lost from them, and that could negatively affect this number. That was another theory. Again, we need to see what is going on here. So, but was this report all bad? Okay. Was it all red flags? Should we be worried? Well, yes and no. So back when Palantir was at $6, we were all hating on Wall Street that Wall Street doesn't get it, and this is actually a $15 to $20 stock because they have all this, technology. They're going to be this huge company, and you just need to look into the future, bro. This is what many people were saying. This is what we were believing, right? And then the funny thing is, now that the stock went up to $20, now everybody in the Palantir community seems to be upset that Wall Street is stupid. They're completely overvaluing the stock. It should be down at the 12s. So which one is it? It's the same stock, guys. And the thing is that it seems like Wall Street is finally starting to get this stock. They're finally starting to look into the future of this stock, and they're somehow giving it more credibility. So what you need to understand is that the stock the company is not the same as the price of the company. Because honestly, if you look at it, Palantir should be the lowest valued in this quarter because they actually had the lowest growth, okay? But it's not. It was lower valued when the growth was higher, and now the growth slowed down even more, and now it's 3x when it doesn't make any sense. Palantir is basically trading on sentiment, okay? So why are you in this stock? You are in this stock because, at least I am, because I believe that this stock is going to be one of the biggest software enterprises on the planet. I believe that they have a super sticky, one-of-a-kind, or products that are one-of-a-kind. They're very sticky, very hard to replace, and I can see them grow into this giant, okay? And we know that this company has very, very long sales cycles. We also know that it tends to give its product at a discount to get the foot in the door. They sold Foundry to NHS for $1, guys, when COVID happened. There is full of stories them doing this, but they're doing this because their product is very, very sticky. So they did this $1 deal with the NHS. It's 3 years later, and now they might be getting a multiple $100 million a year contract from the NHS. So it was a good deal, but there was time in it, there was free service, and there was a lot of waiting involved in this. We also know that this is being basically done because they just need to get into the door of the customers. And unfortunately, this means that when they get new customers, it doesn't come with revenue. It doesn't come with profit increase. Okay, so when you understand this, then let's take a look at this quarter again. So the customer count actually grew. This is what we want to see if we believe in this vision, right? So 38% year over year, that's a beautiful increase. Okay, and what else did they report? They reported that the AIP, which is a new product that they have, came out, and they already have 100 customers that are using it. That's phenomenal scaling, okay? And on top of it, they're in talks with 300 more customers to start using AIP. Fantastic scaling. Then they are also reporting consistent gross margins, okay? And they are reporting increased adjusted operating margins quarter after quarter. A few quarters ago, I believe it was like 13%, and now they're up to 25% adjusted operating margin. The stock-based compensation is continuously down quarter over quarter, and now it's completely normal. And this means that this company is executing people. They are giving you exactly what you would want to see if you understand how this company works. Because if you understand that scaling for them means that first the number of customers increases, and then many quarters from that point, they start getting hundreds of millions of dollars of contracts, and that profit only comes at a later point. So when you understand this, you will see that, okay, what we need to see is a swell up of customer numbers. We want to see that those customers are sticking to the product. And this is exactly what we have been getting. But there is something that is effing with your mind. And what is effing with your mind is you think that the stock price is the company. Because we have had a 200% run up year to date on the stock. And you somehow want to feel that this motion is going to go up into the sky, and you want reasons to keep the stock going higher. And I don't blame you. It's nice to see the plus on your account, but the company is not the stock. And I don't understand what moves the price of Palantir. As I said, it's trading 3 times as expensive as when the growth was higher. It's pretty crazy. So if you, okay, I already made this point. So here is what you need to do, my guy. You need to show patience, okay? Because this company is delivering, and it's not normal that something goes up 200% year to date. I'm happy with 30% year over year growth on the stock. I'm even happy for 20%. So this means that we have run too much. Maybe we need to wait a little bit. It doesn't mean that this is a bad company. You need to do your own valuation, and if you need to look at the long term, and if the price is still good for you, then you need to continue DCAing. If you think that the price is too high, or your position is filled, like in my case, I have a lot of Palantir shares, then you can look at other stock. I'm looking at Enphase. It's looking fantastically sexy, but there's absolutely zero reason to sell this stock because the story is unfolding, management is delivering, and this was a very good quarter if you look at the company. Not a very good one if you look at the stock price, but who cares about the stock price? So please make sure you subscribe. Thank you so much for watching, and I'll see you in the next video. Ciao, ciao.